Let me tell you something. You can avoid a lot of mistakes if you follow this one simple mantra. And that is, never, ever hold an asset that you wouldn't buy today. Don't think in, I either buy it, or I hold it, or I sell it. Don't think in those categories. Instead think, I really like this asset, I want to buy it, I want to accumulate more of it, or I don't like this asset anymore, I'm selling it. But don't believe that there's actually a middle ground here. Because think about this. Let's say you like a stock or you like a cryptocurrency and you're buying it. And now things change. Things around your initial thesis have changed. Maybe you bought because momentum was positive. Maybe you bought because you like the fundamentals. Whatever it is, right? You bought a bit, but then things don't go that well anymore. And you decide, okay, let's just wait. Let's just hold and see if the asset recovers. I'm not going to buy more because I'm not so certain about it anymore. Think about what psychologically here happened. You did, among all those hundreds and thousands of different assets, you made one decision to buy that particular asset, right? To get this idiosyncratic risk. You didn't just buy, say, Bitcoin or an ETF on the whole market. You didn't just get broad diversification. You bought one specific asset. And you were bullish on that asset after you've done all the filtering. And then things change and you become less convinced of your asset. And you say, I just hold. How likely do you think, if you, who used to be very bullish on this asset, how likely do you think that somebody else will come that will buy it from you, that will push up the price, that the market in aggregate will suddenly push up the price? If you, who was prior very, very bullish on this, already became less bullish, right? When you used to be the optimist, now become neutral, how likely do you think that the market suddenly, that's always neutral, turns bullish? It's very, very unlikely, right? Usually, psychologically, we all have, to a degree, confirmation bias. We read only the news that we are interested in that confirms our beliefs. And if despite that bias, our beliefs weaken, then probably the situation is much, much worse than we could imagine. So if you wouldn't buy the asset anymore, if you only have a conviction now to hold it, then you should instantly sell it. There is no middle ground. There's either you want to buy it, you want to buy more, or you want to sell it. There is no buy, hold, sell. There's only buy or sell. This will save you a lot of errors. Because that's an issue that most people fall victim to, right? They buy a lot of assets, the things they're not that happy about anymore, they leave in the portfolio. Those kind of things tend to underperform. Now they've got this broadly diversified portfolio. But instead of focusing on the few very, very strong bets, you now have all these mediocre bets in the portfolio that push down the performance. So instead of maybe just buying the benchmark, right, where you get also the outperformers, you now have all these mediocre assets in your portfolio. Because think about it, when you buy a single asset, the likelihood of it underperforming is above 50%. It's actually 80 to 90%. If you pick a random asset in the stock market, or even worse, a random asset in the cryptocurrency market, the likelihood that that asset will underperform the benchmark, so say the S&P 500 for stocks, or say Bitcoin for crypto, the likelihood is extremely, extremely high. The only reason why it might make sense to get exposure to an individual asset that's not the broad benchmark is because you believe it's part of those few winners. In stocks and in crypto, it is the winner takes most. There are those few outsized winners and they take all of the profits. They take most of the profits. If you buy a phone, right? Or if you buy a car, are you going to buy a lot of different cars or do you try to buy the best car in the market? So when you see, for example, for the smartphone market, right, most profits go to Apple and Samsung. If you buy any other smartphone brand, it's very likely that that brand isn't making money with that smartphone. It's simply the best product wins. The best company gets the capital. And so you have to decide with your investments to only give the money to the best and to not have any allocation to those mediocre holdings. Don't hold assets that you wouldn't be buying now. Only hold assets that you continue to buy, where you would still buy in case you see a little bit of a drop. That saves you from bad diversification, from holding assets you actually should not hold because most assets underperform. It also saves you from riding the losers as they are going down. You don't want to be buying high and selling low and only selling when the situation looks completely desperate. You want to be selling when the situation already looks slightly doubtful. You only want to be buying things where you say, heck yes, that's a winner, that's way better than the average. That's a company, that's a project that will take most gains, because gains are concentrated. Feel free to give this a like, it will help to spread the word. Also subscribe in case you haven't yet, and there's also a Telegram channel, link is down below.